Okay, guys, welcome to Saturday webinar. Let's begin. So yeah, as you all have seen, the presidential debate is kind of very sad how Joe Biden is performing. He is like, he's too old already lah. He's too old already. There's like 1,000 trillionaires. There are no trillionaires. Even Elon Musk at his peak, he wasn't even a trillionaire. He wasn't even halfway to becoming a trillionaire. That's crazy lah. Okay, so I'm not sure how the presidential election will be like. To be honest, I don't really partake in this kind of political discussion. I mean, definitely it's gonna affect the stock market in some ways lah, but I don't pretend to know everything. I don't pretend to know how it affects the stock market or how the election is going, because US politics is very different from Singapore politics. The way the country is being managed and organized, and yes, of course, we do have all the conspiracy theories saying things like the Federal Reserve want the market to go up until election over. I think all this kind of stuff, you can take it with a grain of salt, okay? I mean, maybe there are some truth to it, but I'm not really a subscriber to all these nonsensical conspiracy theory lah. Okay, I mean, it's good to be skeptical, but don't go overboard lah. Okay, don't go overboard. Sometimes those who are in control, such as the Federal Reserve, right, they don't really have a choice in what they have to do. Sometimes they are forced to make a certain decision, and we don't have to pretend like they have some ulterior motive. They are in total control. We don't need to pretend until like that, because sometimes they simply just have no choice. They just have to do, because anything else, any other action that they take, right, it may lead to even worse outcome lah. Okay, guys. So with that out of the way, right, let's just go through quickly. So let's go through the portfolio first. Okay, you can see my portfolio kind of like severely over bloated. I have about 14 position now, which is not very normal, because in the past I used to have like 8 position or 10 position max, but right now I'm having 14 position now. Okay, and that is also mainly because now my capital have gone up much bigger, currently at 260k USD. If you look at 2 years back, I was only operating around like 100k USD lah. Okay, so ever since then, my portfolio actually doubled, or even 150% really lah, 1.5 times really lah. Okay, so because of that, I have a lot of idle cash sitting around, and in order not to waste those cash doing nothing, right, it is good to capitalize them lah. Okay, it is good to put them into some kind of position lah. But as you can see here, right, even with a 14 position portfolio, right, you can see my floating P&L is not really it's not really swinging a lot. It's almost at flat lah. Okay, it's almost at break even like that. But you can see some of the position are doing great, some are kind of like so, some are not doing well. But I mean, from here we can take certain decision now. Okay, but one thing for sure, we definitely need to start looking out for bearish position really. This portfolio is a little bit too overly bullish lah. Okay, we need to trim some long position, and then we need to start balancing it with a bit of short position really lah. But of course, IWM, this IWM short, for those who actually followed, right? Let me pull out, where's my IWM Russell 2000? Is there really? How come it's there? Okay, so for this IWM trade, right, the way this trade is being structured, right, you are able to get 950% return if it goes in our direction now. Okay, so this is basically a hedging trade, where if the market were to crash within like August, right, and then the IWM crash all the way until like strike 175 like that, if that were to happen, then I am going to get about 9.5 times return, meaning to say if I have a $4,000 risk on this one particular trade, I will be able to get about $40,000 in return if market were to crash lah. So meaning to say that this one short position alone, right, it is actually hedging against multiple long position, meaning to say it is not a 1-to-1 really, it's more like a 1-to-3 like that, because if I am risking 5,000, 5,000, 5,000, 5,000, right? And if the market were to crash, I'm gonna get about 40,000 here, and then there will be 20,000 loss that I'm taking, and I'm actually still up like another 20,000 from this one shot alone now. Okay, so sometime when you are doing certain trade just for hedging purpose, right, you can actually get into this kind of situation now where you need to ensure your lot sizing properly and how much your hedging can actually cover, how many position can your hedging trade cover. So in this case, right, my one hedging trade is actually covering 4 bullish position, which is to say, you can see I have 4 additional bullish position here on top of the bearish position. So meaning to say, yes, my portfolio is still bullish bias, but I am sufficiently hedged. And I'm not in any danger where if the market were to crash, right, I will suffer a very, very big drawdown. Okay. So this is what I mean by portfolio management, because I am not just looking at one particular trade alone, but I'm looking at a portfolio level. So if you are somebody who do not understand all this, and if you are looking at IWM as a trade by itself, right, and then you are thinking like, oh my God, Zorse can have 950% return, and then you go and take the trade. And then if this trade lose money, then you're going to lose a lot of money. But the thing is that if in a situation where IWM were to lose money, right, it is highly likely that all the other long positions are actually doing well, and I will get profit from all the other long positions. Okay, so either way, I'm gonna make money, and I don't need to care about market crashing, as long as this hedge position is in play. But of course, as a hedging position, right, you don't really want your hedging position to be in profit, because that would mean that your entire portfolio is going down. So if my hedging position is burnt, meaning to say it doesn't goes into profit, then it's a good thing, because all the other position are going into profit. So if you simply just take this trade because you think IWM is going down or whatever, right, then it is actually not the right mindset. It's not actually the right portfolio management you should be doing. In fact, I have specifically put here, this trade will only work as a hedge. Okay, so be mindful of all this kind of stuff. So that's basically about IWM. So I'm not really gonna care so much about what it is doing. Is it going up or going down? Because as I mentioned, right, it's a hedging trade. So I'm gonna hold it until it probably expires. Okay, the next one, Chewy. So Chewy, it kind of like break even. At one point, I was up about $20,000. Then after that, as it start to come down, right, I was up about like $15,000, but actually by by yesterday, it's actually now back down to break even already. So for a lot of you who are misunderstanding how a vertical option structure work, right, a vertical doesn't really have to be like your price need to be below 35. It doesn't matter, even if the stock goes to like 44, 50, 56, right, you can still get the maximum profit. You are not going to lose money, because every $1 that your long is earning, your short will lose $1. At some point it is going to plateau out. So that is the nature of vertical, which is very, very different from calendar. Calendar, you can actually lose money if the stock rally too much, mainly because of the gamma difference. But in this case, right, the both of the your long leg will actually hit the highest delta before your short leg will hit the delta. So because of that, right, there is no way your short will actually lose more money than your long. But of course, if the stock is very volatile and the stock is moving very, very fast, and then if you have like a 10-second delay in executing your order, right, then you may end up losing money because during that 10 second you are inputting your orders, perhaps the stock moved too much already. But I believe that ever since this movement, the stock kind of like calmed down a bit. So I don't think you will run into such situation really. Okay. And of course, you can also see here for Friday closing, right? I mean, it is still a bearish closing. Okay, it is down about 6%. But you have to note that Chewy in its nature, right, it's actually a very, very volatile stock. In fact, if I were to look at the volatility appraisal is about 21%. It's actually about 21%. And in fact, it is not even, I mean, right now it is like the highest, the most volatile that it has been, but it is not to say that it has never reached this level of volatility before. In the past, it has consistently been hitting this kind of price movement, 21%. Okay. So now if you compare, let's say, Chewy to a company like Pfizer, you can see Pfizer only 4%, meaning Pfizer is 5 times less volatile than Chewy. So you don't have to panic when a volatile stock like this do this kind of thing, because that is their nature. And sometimes that's the precisely the reason why we are taking all this trade in the first place, is because they are very, very volatile. And of course, in this situation, we do have Roaring Kitty tweeting all the Chewy stuff, so the market kind of spooked a bit. But unlike GameStop, Chewy actually have a legitimate growth, and there's a good business model behind it, lah. So I wouldn't be panicking too much yet, because at this stage the position is still profitable, maybe at break even, but we have an expiration that is all the way until September, right? So we have a lot of time, so we are going to continue to hold it. And in fact, the earning is still very, very far. Okay, so we really have a lot of time on our hand in order to hold this position. Okay, and Micron, you can see here Micron, right? I have lost about $2,600 in my open position. That's not really a lot, considering that I actually risked 10K on this trade. Okay, 10K SGD lah, not 10K USD. So if I actually put everything at zero, right, you can see I will be losing about $7,000 USD lah, okay, which comes to about maybe $11,000 SGD, like that. But one thing that I may consider doing, right, is you can actually see the short leg, right, lost most of the value already. So I may just TP the short leg, and then I will add another short leg, maybe like August expiration, with strike 155 or 160, depending on how the premium is lah. Okay, let me consider this, because there's actually no point in holding this position really, because it has already lost like almost 90% of the value already lah. Okay, the next one, Applovin, doing very, very well. In fact, it is one of the stock that is kind of like holding up our portfolio a bit lah. Okay, so Applovin, it kind of recover very, very very well compared to other tech stock, other AI stock, right? The movement that Applovin have was quite significant. I mean, if you look at the Magnificent Seven, right, you can see from the last week they are not really doing that great. Meta is down 2.9, Amazon is down 2.3, Apple is down 1.6, Microsoft is down 1.3. But if you look at Applovin, right, on a weekly candle, it's actually a very, very nice candle. In fact, it kind of closed above the high of this candle and this candle lah, okay, which is actually great news. So hopefully this particular trend stay intact, and it can actually go up a lot higher. So the growth and the fundamental on Applovin is actually quite strong, but what I am concerned is the macroeconomic aspect of the current market condition now. Okay, so the yields are like all over the place, and a bit hard to make sense of what's going on from a macroeconomic perspective also. Next one, McDonald. Okay, McDonald, like a bit not here, not there, not here, not there. Initially, it is actually at a very nice trend line now. Okay, but it was kind of consolidating here. But Friday candle, I don't really like it, because it kind of closed below the low of all these what I would consider support candle lah. Okay, meaning to say next week, right, it better close above. If it doesn't close above and continue to go down, right, then we may have to cut this position lah. We may have to cut this position that we have before the loss start to balloon up lah. But you can also see that the short leg expiration is end of July, meaning to say, right, if in the next few weeks, it goes up a bit, but it kind of like sideways, never really rally, right? Then we can continue to keep, okay? We just don't want it to go all the way like maybe below $250 like that. Then that will be quite bad really. But McDonald's still can hold for now. I will continue to hold the position. Pfizer can't really do much. It's at 14 cents right now. But it is recovering now. Okay, it is recovering, and as long as this recovery continues, right, maybe there's some hope for Pfizer also, because our expiration is in August. We don't have any short leg. Also, we don't want to enter any short leg for now, okay, because the premiums are not really worth it. But at the same time, right, it's not exiting this position won't really do much also, because I'm already losing $3,000. If I were to exit this position, right, I will lose about 4,500, which means another $1,000 like that, okay, another 1,300, $400 like that. In my opinion, right, I would rather risk the entire $4,500, just leave the position there in case the stock actually recover and then the option become profitable, okay? Because let's say if you just exit the whole thing, right, you're already eating the $3,000 loss, and then you eat another $1,000, then I mean, if suddenly the stock recover, then you also hong kan already, because you are not really saving much lah. You are only saving like $1,000 plus. I mean, if you have a smaller account, maybe the number is even smaller lah. But in my perspective, I feel that saving this extra $1,000 is not worth it compared to the reward of the stock actually recovering. And in fact, it does show good recovery lah. Okay, we have like support level here, and then we have another good kind of like a recovery candle that came in just above this support level, okay? So hopefully it can continue to go up and then break this resistance here. Next we have Hershey. So Hershey, we have like a very complex structure here. We have a stock and a covered call, and we have a we have a vertical here. No, we have a diagonal here, okay? We have the stock position here, Hershey Company, which is down about $3,700, which is actually offset by the long put option, which is up about $3,876. So between these two, right, I'm actually kind of like break even lah. So where is the profit coming from? The profit is coming from the short leg, the short put option, and the covered call. So the short put option alone, it can give me about $2,000, and the covered call can give me about $3,000, which means to say I have about $5,000 in premium that I can actually get from the short put and the covered call, because the long put and the share position, right, is actually even, they are offsetting each other lah. Okay, so I don't really need to worry much. So all I have to do, right, I just need to hold this position, and eventually when the options expires, right, I can actually get the cover call premium and the short put premium. So you can see the long put is actually expiring on September. So I can do this until September. And of course, the stock position have no expiration, meaning I can do this as long as I want. So once I actually get the full $5,000 premium from the covered call and the short put, right, I can actually set up another round with the September expiration. Okay, so I can actually set up two rounds. But of course, depending on where the stock is, right, maybe the last round with the September expiration, I may not get as much as $5,000. Okay, I may probably get around $2,000, $3,000, which is still good enough, because it will come to about $8,000 or even $9,000 in profit, which is considering how this trade was going initially, right? And then I managed to sort of restructure in a way that I can still benefit from it, and I'm benefiting about $10,000 from it, $9,000 from it, is actually a very, very desirable outcome. So this is what I mean by you need to have the knowledge, you need to have the experience to do this kind of thing, because never ever in our trading webinar we have actually done this, where we take our assignment on a calendar short, and then we do a cover call and a vertical. We turn the other long put into a vertical, and it is mainly because in this situation it makes sense to do so. And you can only do this if you are aware that this option is available to you. If you are not aware you can do this, then you're not going to do this and you are just going to like, oh my God, my trade went wrong. I'm going to cut. I'm in a loss already. But actually you do have the option to salvage the whole situation and actually earn a big profit from it. Okay. So that's the reason why as I mentioned during yesterday webinar, right? If you are learning option, you cannot learn it the shortcut way. You cannot go attend a course and then learn some stupid strategy. You actually need to learn it academically, meaning you need to understand at the very basic what is going on, what are the kind of structure and what are the kind of choices that you can make given your current situation. So next, Toll Brother. Toll Brother, this is the leftover position that we have lah, okay? So we are holding a long put option with strike 115. So Toll Brother is kind of still doing okay. It's kind of like hanging around there. It tries to rally lah, okay? It always try to rally, but end up closing at the red lah for some reason. But from my latest discussion with my hedge fund peers, right? We are all very, very bearish on the construction, the housing sector, okay, the home builder sector. So we will continue to hold on to this position. And we may add a short leg, probably like August. I see how lah, okay, I see how, because right now if it is going down more, right, then we are in no hurry to add the short leg lah. We will see how lah, okay. But this position is in a bit of profit, so it's good. And of course we have the star Palantir. Okay, so now Palantir is a very, very interesting position right now. I'm up about $4,500. Is to be honest, my target is somewhere around like 10K and above lah. Okay, so if you see the kind of risk that I'm taking right now, I'm taking about 4K, minimum 4K risk already lah. Okay, so on a 4K risk, right, the kind of profit I want is above 10K lah. So which is why most of the time you will start to see trades that are very, very near 10K lah. Okay, so of course maybe on individual leg it might not go to 10K, but if you consider both leg together, they will be somewhere around 10K lah. Okay, I mean on successful trade lah. Of course, we definitely have the non-successful one, but on a successful trade, I do want at least around 10K like that. So you can see my AMR is still sitting there at 8K profit like that. Okay, so now Palantir. Why do I say Palantir is in a very, very interesting situation right now? Because you can see it actually rallied quite significantly from our entry price. Our entry price is somewhere around $22, okay? And currently, it is somewhere about $25, very, very close to the potential target already, okay? So now, when we enter this particular trade, right, our strike price, this is a simple call, simple call. Our strike price was 24, which is around here. And then the stop price is somewhere around 25, okay? So now we actually paid, what's our Palantir? We actually paid $1.83 for Palantir, okay? We actually paid $1.83. Currently, it is about $3.35 right now. So let me show you. If I go to option chain, right? Where's my Palantir? Oops. Okay, never mind. Let me go and okay, Palantir is here. Okay, so if I go to September expiration, which is what we have lah, okay, which is what we have, September expiration, and let's turn it into a vertical lah, okay, let's turn it into a vertical, and let's say I want to go with strike 28. Okay, so the long call is 25, the short call, let's go with 28. You can actually see the 28 strike is about $1.53 to $1.75. So if we short strike 28, right, at maybe $1.70 like that, we actually remove the entire risk already. Our risk is only like 10 cents like that, okay? If we add the short leg, our risk is actually like 10 cents like that. But meaning to say you basically have almost a risk-free trade on Palantir. There is no way you are going to lose money on Palantir, but the issue with this kind of move is that your profit will be capped at $28. Okay, $28 as in when Palantir is at $28 because you shorted at 28, right? You will be obligated to sell your Palantir shares at 28. Okay, so meaning to say if Palantir were to rally beyond 28, it goes to 30, 31, 32, right? You are not going to capture any profit beyond strike 28. So that's the reason why I am not that reluctant. Why I am not that keen on placing the short call. Yes, I do get a zero risk trade, but what's the point of zero risk trade if I am foregoing profit? Because if you manage a long short portfolio long enough, right, any profit that you give up is actually as good as a loss. If I miss making additional $5,000 because I screw up the structure, then that is basically a loss to me. So for example, even for Hershey, right? Even though I have managed to successfully restructure the trade into something that can make profit, but the fact that Hershey actually dropped so much, the fact that Hershey actually from our entry price until here dropped so much, right? I wasn't able to get a single cent out of it. It is as good as losing the trade because you put in your risk, but you're not getting anything. It's as good as losing $4,000. And the reason is that if my other stocks are losing money, right? And because I am unable to get any profit from this, then my entire portfolio can actually end up in a net loss because of the fact that I wasn't able to get a good structure on Hershey. So that's the kind of mentality you should have. It is not always that like everything you must see green, like all your position you have to be see green. But actually, right, sometimes missed profit can actually hurt a lot also, especially if you call the direction correctly, but you did not structure your trade properly enough to sort of follow it up. Okay. So Palantir, if you are the kind that really like risk-free trade, by all means go for it. It is not a wrong decision. It is not a wrong decision, but to me, I am leaning towards more on the greedy side. Okay. I'm leaning more towards on the greedy side. And one of the reasons why I am leaning on the greedy side is also because if the market were to crash, right, I have my IWM hedging position, so I don't really need to scare so much about the market crashing because IWM will sort of cover almost like 4 or 5 of my bullish position so I can be very aggressive on my bullish position because if market were to continue to rally, right, I'm gonna lose money on IWM, meaning to say my other position need to make money because the IWM is losing. So you can also see here how my portfolio structure actually decide what kind of decision I should take on Palantir or any other trades that I have. Okay. And once again, right, this is what I mean by portfolio management, deciding on a portfolio level, not on a single trade level. Okay. So next one, BXMT, Blackstone Mortgage, recently came back down a bit, kind of like plateauing here okay. I do like this engulfing candle here. Hopefully it can crash some more okay. We still have one more month because the expiration is in July, right? We still have one more month for BXMT to go down okay. So if you scared, right, you can definitely let go at break even, but once again I will prefer the greedier situation that if market were to go down, I want to profit from this. So in fact, because my portfolio is very few bearish position, right? I don't really want to get rid of this bearish position also. Okay. So next, SEMR unfortunately is not doing great. We were in a very good position quite a few weeks back, but eventually SEMR kind of like retraced back. And not only that, the option position, right, the option is not really liquid meaning to say we are unable to exit the option position without taking significant loss from the spread, okay? So because of that, right, rather than exiting, I'm gonna just leave the option there because the expiration is also on July 19, meaning to say that just leave it there and hope for a miracle to happen lah. Because if it goes back up to $16, right, then yes, I'm gonna make some money. And it's not impossible also. It's not impossible. It is within the volatility of SCMR to go back to $16 lah. It is something that SCMR can do lah. You can see the weekly volatility is about 9%. So I have about 4 weeks. Hopefully it can rally back up within like 1 or 2 weeks lah. Okay, and then of course we have AMR, and then sets unfortunately came back all the way down to like 2.85 like that. It was going as high as 2.9 something, very very close to $3, but it retraced back. But as I've said earlier, right, sets is a long-term position. It's a long-term position that I'm looking to hold for maybe 1 or 2 years, and I do think that it can break through above this resistance level lah. Okay, it just needs some time. So maybe it's gonna ding dong a bit before it fly up lah. Unfortunately, unlike US stock, right, sets you cannot do things like covered call, which is a very very sad case lah. Okay, because if I were to be holding this long term, definitely covered call are a very very good position to take lah. But since SETS is a Singapore stock, we cannot do that, okay? And then of course we have the Lumen Technology and Allogene, which are two very speculative short squeeze stock that we are still waiting for the short squeeze to happen now, okay? So now with all that said, hopefully I've covered all my portfolio position and you also understand why I am doing certain things and why I'm taking certain action on a portfolio level, not just on the trade level, okay? So in terms of individual trade, right, we didn't really close any trade last week. I mean this week, okay? So you can see how my overall open position are getting very, very out of hand already. So the year-to-date ROI still did not change. It is still at 30.22%. So as I was mentioning in yesterday webinar, right, I consider myself quite successful on a retailer level, but if I were to compare with my hedge fund peers, right, I'm actually underperforming quite severely because if we were comparing the half a year 2H performance, right, the average performance for the hedge fund traders who are within the community is somewhere around 45.5%, okay? 45.5% is actually the average, meaning we have the highest percent return was around 110%, which is super crazy, super duper crazy. And considering that the average is around 45.5, right, I'm actually at the lower percentile, okay? In fact, I'm one of the underperforming one, because when we are talking about actively managed portfolio, okay, actively managed meaning to say we are putting 20 hours, 30 hours, for some people even 40 hours a week, basically a full-time job, right? We don't want things like 5% return, 10% return. We don't want nonsensical return like that. What we want is 50, 60, 70, 80. We want those kind of return because this is not passive. This is actually active, okay? If you are managing a passive portfolio, you put your money and then you leave it there, don't do anything, right? Then of course 5-10% is good enough lah. But for an actively managed portfolio, right, 30% return, to be honest, personally, on my on reviewing my own performance is a bit low. I will expect somewhere around like 40% lah by half a year lah. But of course, the reason why it is this low is we do have quite a lot of bad trades, or quite a lot of trades that the structure didn't really go well. But I think I will do one webinar on reviewing all the trades that we have taken for the first half of the year lah, okay? And I also think that majority of the losing trades are coming from a lot of YOLO trade. We have taken a lot of YOLO trade that actually end up in a loss. There were only a few YOLO trade that went in our direction, and most of those are actually during June. During June, we got 4 YOLO trades that went well, but actually for the rest of the year, every other YOLO trade was quite bad lah. We were not able to hit those numbers lah, okay? So we will do a review on that. So now going forward next week, right? We are into July already. So July, we are in Q3 ready, meaning to say that earning season is starting all over again. So get ready for all the banks earning, all the tech earning lah, okay? But I also want to announce that for majority of July, I will be away to Europe on a holiday lah, okay? Because I think I've worked I've worked very hard for first half of the year, so I'll be away on a holiday trip lah, mainly from 15 all the way until 31st lah, okay? That will cover about 2 weekends, but I will still be bringing my laptop because all those positions most likely are not going to close. So I will still be bringing my laptops, meaning to say there will still be webinars, lah, okay? And not to worry, I'm not climbing mountains, so I will have good internet connection and I will probably not lose my voice over there, lah, okay? So I will update you guys as and when I have a more detailed plan on where my travel will take me, lah. So since we are going to July, right? The usual, we have ISM coming up on Monday, and then we have the I don't know what power is giving speech on Tuesday, no idea, but we will see how lah, okay? And then we have IM service coming out on Wednesday, and of course we have the non-farm payroll that is coming out on next Friday, and of course 4th of July, I believe it's a holiday, right? How come there are data coming out? There should be a holiday on 4th of July, if I'm not wrong. Okay, so we do have quite a lot of data coming up next week, okay? So now since we are severely lacking on short position, right? I do have quite a number of short trades that are like ready to go, but I'm still thinking how I should take them, okay? And the first one is Mondelez. So Mondelez, we have mentioned this many times already lah, okay? About 2 to 3 weeks ago, we start mentioning Mondelez already, and the reason why I didn't want to take the trade is because of this candle here. We have this breakdown, and then after that we have this candle that break over here, and then after that it sort of immediately U-turn again. So we have that kind of price action happening here, okay? But of course, I mean the overall direction, I believe the catalyst for Mondelez is towards the downside lah, because we do have the very high cocoa prices that is eating into Mondelez margin now, okay? And overall, the consumer staple sector is also not doing that great. You can see counters like McDonald's, or even counters like General Mills doing quite bad, okay? General Mills actually gap down on earnings. And then we got counters like I believe Walmart also. Actually, okay, Walmart is really doing very well, but counters like McDonald, General Mills, how about Kroger? Yeah, Kroger also U-turn back down already. So all these chocolate, cereal, all these kind of companies, they are not doing that great lah. So since I already have that very complicated position on Hershey, right? I'm not gonna retake Hershey again, but I will go for Mondelez lah, okay? In fact, Mondelez is actually a much better short target, mainly because it is much cheaper in price, and I do believe the market cap is a lot higher. Yeah, market cap is a lot higher than Hershey, also at 87 billion. Meaning to say it is much more liquid, and the options are much easier, much cheaper, and much more liquid to trade lah, okay? So we will be looking at Mondelez for next week in order to short. On top of which we are also looking at KB Home. Okay, so KB Home is a home builder lah, okay? So we already have Toll Brother as a home builder. So now the question is, do we want to double down or not double down on the home building if things were to go south lah, okay? So now KB Home, right? Unlike Toll Brother, it has not start the downtrend yet. It is still somewhere up there lah, okay? Meaning to say, if the weakness in the home building sector were to persist, right, there is actually some meat there even for the first downside lah. Okay, maybe we can even look until like $60 or maybe even around $55 lah. So there's actually some meat here lah. Okay, so I have to see how I should balance out with Toll Brother, or if I should just remove my position for Toll Brother and then shift the position into KBH lah. Okay, because right now my Toll Brother actually is making some money lah. So it's not really in a losing position. So now the decision here is, do I want to exit Toll Brother and enter KBH, or do I want to just enter KBH and then keep Toll Brother, meaning to say I have double position in the same sector lah. Okay, looking at the fundamentals, right? They are somewhere around the same. Toll Brother actually is slightly worse, but among the entire home builder sector, right, Toll Brother and KBH are the two bottom one lah. Okay, because considering the fact that Toll Brother already moved, but KBH haven't moved yet, and we can actually aim for the September, the September earnings also lah, which is right after the August, July, right after the July's FOMC, right? Maybe it has sufficient catalyst for the stock to go down. Okay, so KBH, if you do not have Toll Brother, then of course you can go ahead and straight away enter KBH. Okay, but I haven't really worked out the option structure yet. So let me work out the option structure, and then we see what we have lah. And then the last one is Avis Budget. Avis Budget is a car rental lah. Okay, it's a car rental, car leasing company lah. And recently, they are not doing very good. They have gone back to loss making already, and it seems like their margin is getting squeezed very, very bad lah. Okay, and I think given how over bloated this entire sector is, right, I think there's actually more room to the downside. In fact, I'm looking at somewhere around like $50 like that. $60 to $50 like that, meaning another 50% down. Okay, but it will probably take some time for this stock to go down. So once again, right, I need to see how do I want to structure this also. Okay, so we actually got 3 short position on our hand that we can take position. And in terms of technical wise, right, I mean, if you are going for option, you don't really need to care about technical. You can simply just go in lah. Okay, if you feel that the stock may rebound, like for example, if go down already, you scared it will rebound, right, then you simply just take a diagonal position or a calendar position, and you just take the premium during the rebound, and then once the stock resume downtrend, right, you can actually consider. Another one that I'm looking at is also Adobe. So yes, Adobe actually earnings like not bad, go up, but actually the earnings is not really that great, to be honest. And there's once again a lot of AI optimism, but there's actually no monetization from the AI itself. Not only that, right, recently I've been reading a lot of news regarding how predatory Adobe's subscription system is, because it doesn't really allow you to unsubscribe in a simple manner. You have to really go through a lot of hoops in order to unsub from Adobe services. Okay, and actually quite a lot of corporates are not really taking a liking to this. So I am still keeping up like monitoring this, not really in a hurry to go, because if the stock were to go higher, right, I'll just let it go higher lah, then we can short it at a cheaper price lah. I mean, we can short it at a better price lah, not in a hurry. We already have 3 good short target on our watch list. So this is something like additional that we are in no hurry to go in also. Okay, and then on the long side, right, as I mentioned, I'm still bullish on gold. So Newmont, it is kind of like going sideways. So I think we can take some calendar position. Since it is going sideways, might as well capture the premium. I see what I can do with Newmont also, but I mean, my position is simply too much really lah. Okay, I'm not sure even if I want to exit, what position I want to exit lah. Like not except for AMR, right, none of the position I really do want to exit in the current state lah. Okay, even for AMR, I don't want to exit. The main reason is also because it's a bearish position, and I don't really want to get rid of any bearish position that I have right now lah. Okay, so now before I end, let's just take a very quick look at the overall market itself. You can see the market kind of like U-turn yesterday. The market kind of like U-turn yesterday, and it's a little bit strange because it U-turn after the inflation estimate came out. Wait, this week, previous week. What's yesterday? Okay, it actually U-turn after the inflation expectation came out, the Michigan inflation expectation lah, and the inflation expectation was actually lower. It's lower than the consensus, and even is lower than the previous. So this downside, right? This sudden downside is a little bit alarming, because if market were to respond negatively to lower inflation expectation, right, then it is kind of like feeling a little bit recessionary, because in a recession we do scared if deflation lah. Okay, if we go into deflation, is not a good thing also, but I mean it is just one day, like just one day that we are seeing this kind of pattern lah. So it could be something else that is causing the market to go down. But the fact that we are seeing a bit of reaction from a lower inflation expectation is slightly alarming lah. Okay, in fact, the 10-year yield kind of like suddenly chong all the way back up, like 2.71%, which is a bit aggressive lah. Okay, so this is something that I want to keep a very close eye on. And in fact, gold actually kind of like recover also. Initially gold was like coming down, but towards the end it kind of like recover back up a bit also lah. Okay, so I wouldn't draw any conclusion from this. I mean, you don't have to suddenly go like, oh my god, recession coming, everything short, this short, that short, everything short. I don't think so also, but it's something you want to put on your radar lah. Okay, so that's all I have, guys. Thank you for coming, and all the best next week. Have a good weekend next week. Quite a lot of stuff ongoing lah. Okay, so we want to be paying attention to the market next week also. We got all the ISM and the NFP, and then we are at the beginning of a new earning season also. New earning season, very exciting one. So let's see what we can do for this earning season. Any additional thing that we can look out for this earning season also lah. Okay, there's a lot of stuff to trade one, definitely. Okay, guys, have a good weekend, have a good night, and see you next week.